Hello and welcome to another update video about ADA. We start on the 4-hour chart. I wanted to show you again the two possibilities that we have on this chart and how they could develop further. So on the ADA chart, we have a pretty incomplete looking downside structure. I have to say that is the case for many altcoins, which means that we have to be on the side of caution and we shouldn't, just go crazy all in, whatever. Doesn't mean we couldn't trade it on the long side. In fact, I've been mentioning it since the 21st of October that across the altcoin sector, I'd rather be positioned on the long side than on the short side, given the phase change that we've seen in the crypto market, given some breakouts that like Link's breakout, Bitcoin's breakout anyway, and all of that in addition to the altcoins and Bitcoin's ability to hold above breakout points is really good, and it is a bit of a phase change. So we'd rather focus on the long side, rather focus on an uptrend. However, it still does not, it doesn't allow us to ignore the risk of another bear market low. It's still very real. It's still very real. That's just the situation here across the altcoin sector. Now we know that a lot of the altcoins, they start rallies from pretty messy looking structures typically. So that doesn't mean they couldn't rally. It just means we still have to be careful, That's why cryptos are a bit more risky. It's one of the reasons, because when we talk about stocks, shares, stock charts really, other assets, oil, nat gas, stuff like that, they develop much better structures off the lows than altcoins typically. It's just the nature of the altcoin charts, right? And therefore we want to be careful with micro counting, things like that. And we always need to manage our risk. Now, I can only highlight to you that we still have a very nice looking triangle here. So that has done what it needed to do. A wave, B wave, C wave, D wave, E wave. And it's now in an ideal target range for this E wave, which is typically the last wave of the triangle. And obviously you would normally expect the triangle then to be a trend continuation pattern, and we would expect it to break to the downside. At least, shouldn't say expected, we're watching for it, because it's now, the price is now in this pivot point, in this pivotal area between 30 and 34 cents. And from here, if a breakdown occurs, this would be the ideal spot, okay? Again, TA is no crystal ball, but we highlight the risk, and the risk for a breakdown is high in here. Now, if the bulls can push above the pivotal area, it's just a pivot point. It's basically just a decision point. If the bulls can push above it, then we have to take the yellow wave count much more seriously. And the yellow wave count would not rule out the risk for a bear market low, but it would be the first step to get to a new bull market high or a new all-time high. So the yellow count basically would assume that we're dealing here with a diagonal structure of the June lows, a wave 1 to the upside, a wave 2 to the downside. The wave 3 would likely still be in the making, could be nearly finished, then a wave 4 down and a wave 5 up. That in itself will not rule out another bear market low, I'm afraid. No, it could just simply be part of a larger degree flat structure. A wave, B wave, and then all of this is the C wave. So it will really depend on, first of all, the bull's ability to create 5 waves up, but also hold a higher low in the setback afterwards. There will always be a pullback. The question is just how long does the wave 1 go? In this scenario, this 5-wave move, it should ideally move above the A wave high, so above 45 cents. So we could be targeting 55 cents roughly. So that's sort of just the risk with this chart at the moment. We still said we are focusing on the upside until support levels break, because this could develop into something more bullish. So at the moment, the support levels I communicated to you are holding. It's just that in this area, we just need to be very mindful of a turning point, a possible turnaround. Now we've seen a little bit of upside, probably fueled by the Cardano conference. Obviously, you could say Solana's conference sparked a little bit more bullishness, you could say, but then the entire chart, the entire Solana chart was basically primed for it. The ADA chart, not really, or it first needs to build it. On the Solana chart, we had already certain structures that allowed it to rally, whereas on the ADA chart, it's much more difficult. Here we're still very much in the beginning, right? So if we zoom in to look at the micro structure, We have off the low here. I mean, I'm tracking on the microstructure really only the, let's say, the bearish count for now. That doesn't mean something more bullish couldn't develop. I just want to keep the chart clean. And it doesn't really matter if I call it a C wave to the upside or a wave 5 or whatever. The trend is currently still up against the support levels I will highlight. So be aware that above 38 cents, above this July high, the yellow wave count will most likely be in control. And that would be this diagonal structure where wave 2 bottomed here actually in, do I need to shift it? Yeah, I think I need to shift it to here. That doesn't make a difference though, because that was the low, the 11th of September low. So we would then have started a third wave to the upside, which would be basically, could be a WXY, ABC. There are different ways of counting this. But the thing is, if we are going to the 1 hour chart, then you see that what we've been tracking here was 1, 2, 3. So basically 3 waves into the end of October high, a wave 4 pullback, which held support, and then now the wave 5 to the upside, which to be honest has got enough waves to complete. So I've labeled it as basically a wave 5 now, but that doesn't mean it has to be complete. Wave labels are not targets. Wave labels are just placeholders, okay? The boxes are basically targets or pivotal areas, support areas, resistance areas, but the wave labels are not targets. They're simply placeholders. So against basically this last swing low that was made on the 2nd of November at 29.9 cents, I think we can still focus on higher. We also have the trend line here that is currently being respected. We can actually draw that a little bit more steep, okay? So it's quite steep now, but the price is currently respecting it. And as long as that 29.8 cent level is holding, I think the focus could be on higher. There are various ways how this structure could unfold. I'm tracking the white wave count or even the yellow count here, which is an ABC structure. The next key point to break above is 32.9 cents. That's the 61.8 Fibonacci extension level. A break above it could send us to 36 cents, which is the 1-to-1 ratio. Above that level, we can watch for the 38 cent level. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. As a channel member, if you're interested, you get access to a weekly live stream. Tomorrow we've got the next one. We're going to talk about how to identify coins to outperform Bitcoin and Ethereum in the bull run. There's always an educational topic we cover, also cover some member coin requests. Then you get access to Discord and Telegram, the chat rooms, lots of educational content. And as a gold member, you get access to additional short-term market updates. Thanks a lot for watching. Bye-bye.